Turning off the tap, global investors fear the flow of cheap money could come to an end as America's central bank holds its crucial meeting. Closing the skills gap. Earn as you learn helps drive the young into engineering jobs in Germany. We take a look at how. Hello and welcome you with World Business Report. I'm Sally BUNDOCK. In a moment we head to Berlin and see how one factory is giving its interns a leg up. But first, today is the day. The US Central Bank is expected to reduce the amount of cheap money it pumps into the world's biggest economy. The Federal Reserve's already indicated it will gradually bring its $85 billion a month stimulus program to an end. It says the financial system and the economy have recovered enough to do without these emergency measures. And one of the main reasons it claims this is because the unemployment rate in the US has fallen. In fact, it's at its lowest level in 5 years at 7.3%. But if all the people that have dropped out of the labour market in that time were still looking for jobs, then the rate would actually be over 10%. In fact, there are roughly 1.8 million fewer people now looking for jobs in the States than there were before the financial crisis. And these numbers explain why the decision for the Federal Reserve today is actually quite a tricky one. So let's get more now on what people are expecting. With me, I'm joined by Jane Foley, Senior Economist at Rabobank. Jane, good to see you.
Thank you.
We've all been waiting for this day since the end of May, really, haven't we?
Since May the 22nd.
In fact, May the 22nd. So is today the day?
Well, it should be the day today. I mean, for instance, you've been going through some of the labour market statistics, and actually it's probably worse than you described. For instance, underemployment. People who have got jobs are often underemployed. They're in part-time works rather than full-time work. So there's a lot of pressure still on the labour market. It still hasn't recovered to that post-crisis or pre-crisis situation. Not only that, there's been a lot of fiscal austerity in the US this year. So incomes are being squeezed too. And the rate of growth in the US right now, well, there is growth, but it's much more disappointing than what people were anticipating for this point of the economic cycle. So can they act? Well, the problem is if they don't, then many people are saying there's credibility on the line. Back in May the 22nd, Bernanke, the chairman of the Fed, told us that tapering, as they're calling it, could happen in the next few meetings. Here we are, next few minutes later, next few meetings later. Are they going to taper? Well, if they don't, people are going to say, well, they signal they would. So if they don't do it, that goes against their credibility. So people are anticipating that they will, but probably only going to dip their toe in, only reduce the amount of asset purchases by a fairly moderate amount.
And what impact will that have?
Well, we've had a huge amount of impact in the summer. Just the idea of tapering has caused a huge ruckus, particularly in emerging markets. Now, emerging markets are considered to be a risky asset. Equities are considered to be a risky asset, but emerging market equities much more so. And emerging markets over the summer have seen a huge amount of capital pulled back out of these economies. And that's quite dangerous for many of these emerging markets. So again, if the Fed give a big shock to the markets today, those emerging markets are vulnerable. But what I think might happen is that they will just dip their toe in, they'll just pull back a little bit of the amount of monthly asset purchases, and they lace that with lots of language that reassures us. And I think that's probably what they're going to do, but it is quite exciting.
Also as well, for the US economy, you've talked about the emerging markets. What impact will it have on the US economy? And that's quite difficult to discuss, isn't it? Because, you know, with so many states within in very different economic situations, it's hard to gauge, isn't it, who will win and who will lose?
Well, exactly right. Well, one effect that we've had already, just the anticipation that this is going to happen, is bond yields have gone high. These are also called long-term interest rates, and often in the US, mortgages are tied to this. So already just the anticipation that this is going to happen has caused mortgage rates to go higher. So just by talking about it, you could say that there's been some impact on the economy already.
Very briefly, Jane, the other big chat this week was about who's going to replace Ben Bernanke. Do you think most hope it is going to be Janet Yellen, who's seen as the next favourite? Because actually, if this little bit of tapering that we might see today does cause a big shock or or ripples in an economy to an adverse effect, she can maybe counter that when she gets the job?
Well, the Fed have already indicated that all of the QE will be finished perhaps by the middle of next year, but it is assumed by the markets that Janet Yellen is in favour of a very soft, a very easy monetary policy, meaning that the pace of any further tapering could be slow, and that's why the markets like her.
All right, Jane, thank you very much indeed. Of course, here on the BBC, we will keep you up to date as the day progresses. That Federal Reserve meeting and press conference is later on today. We'll be right across it. Now, though, to Germany, and the election there, of course, is looming large now, and this is the next of our special series on the powerhouse of Europe. We're looking at how they're managing to close the skills gap there, because in Germany, you don't have to go to university to work at the country's biggest firms. The nation's dual education system gives young people both practical and workplace skills before they start their first job. So, for example, at the manufacturing giant Siemens, apprentices there are from all over Europe. They come to Germany as part of a scheme that lets young people earn as they learn. Tanya Beckett explains from Berlin.
Honing technical skills in the workshop at manufacturing giant Siemens. These young apprentices come from all over Europe for a 3-year programme that gives them a wage while they learn the art of German engineering.
Everybody knows what the label "Made in Germany" means, and this is a perfect example of how they do it, and I think it's an excellent chance for everybody here.
Having come here and experienced it, they are much more precise. They go into detail a lot more, and it helps you understand why all the best engineers and creators come from here, because they go in depth so much and they don't leave anything out from what you learn.
Well, I come from Spain, and in Spain we don't have the opportunity to study praxis and theory at the same time.
It's an approach to technical training which is shared by many other German firms and has been described as a key plank of the country's economic success. Learning to speak fluent German is part of the deal. The course is tough, unpractical.
They, on the one hand, have their degree at the end, and also they have 3 years of really on-the-job experience.
Martin Stuckmann, who runs the training at Siemens, says the investment in apprentices is money well spent.
Around about 90% of them stay at Siemens after they have finished their education.
But these German training schemes do little to help older workers, and knowledge is limited to the activities of the company.
The Brandenburg Gate is a relic of the partition between East and West. And when that partition was taken down, there was a desire within German society to remove other divisions. So now the belief is not just some, but all German workers should feel they can develop skills which are valued.
In Germany's ageing population, it has helped plug a skills gap and kept youth unemployment low. So Germany adds apprenticeship training to its list of exports. And this product, just like many of its others, has proved very difficult to copy. Tanya Beckett, BBC News, Germany.
In other business news, Boeing's latest Dreamliner model has completed its first flight. The Stretch 787-9 can carry 40 more passengers and fly longer distances than the current model. Investors are betting this new plane will not be plagued with the battery problems like its predecessor. Boeing shares closed at a record high. Microsoft released an emergency software fix for Internet Explorer late on Tuesday after hackers exploited a security flaw in the popular web browser. The flaw meant users were vulnerable to attack. Microsoft's website said the fix-it software was an emergency measure to protect customers after learning about extremely limited targeted attacks. JP Morgan Chase has spent $1 billion tackling its regulatory issues following the trading scandal that rocked the bank last year. A rogue trader known as the London Whale used complex derivatives to hide trading losses that eventually exceeded $6 billion. So the markets today, as you can imagine, are completely engrossed in what will happen later in Washington at the US Central Bank. So we've got quite a mixed picture here. Japan up 1.5% almost. As you can see, the rest of the main markets in Asia all lower. It's interesting to see how, of course, these markets are interpreting how they will be impacted by so-called tapering. That's the close in the United States. And that's World Business Report. We'll look through the papers next.